Good afternoon. It's Sunday, November 24th, 2024. It's just after 2 p.m. on the East Coast, and this is Rob Sin at CO Technician on X, at Goldfinger on co.ca, and this is Goldfinger Capital on YouTube. Thanks for tuning in this weekend. As always, we have a lot to get to. You can see my tabs are just out of control again this morning, as I have a bunch of juniors I'm going to talk about at the end, and I have some news up, topical news from each of my choices that we're going to discuss. As we enter Thanksgiving week in the U.S., as we're in the teeth of tax loss selling season in the junior mining sector, this week is definitely an opportunity to present gratitude, to think about things that you're grateful for in your life and in the world. At the end of the day, gratitude is the root of all happiness. Without being grateful, it's kind of hard to be happy. And when we are grateful, it's hard to be unhappy. So think about that. And, this week is definitely a time to be with friends and family and savor some of the little things in life, slow things down a bit. And for me, it's a time to think about my tax loss silly season list. I don't have the list made up 2 weeks before I publish it. It's literally up to the day that I publish it. I'm thinking about it. I'm rearranging it. Definitely have a bunch of stocks on my mind right now. I'll talk about a couple of them later that won't be on it because of share price changes, recently. But yeah, that's what I do on Thanksgiving every year. I think about junior mining stocks. That's how crazy I am. But we're not there yet. So you're going to have to wait another week to get that list. The next 2 to 3 weeks is, I can say this with full confidence, is the best time of the year to be putting capital to work in the junior mining sector. I have no doubt, no qualms about saying that. This is the best time to be a buyer. Not going to change my mind in the comments section, but you can try. It's a good time. It's a good time to be bottom fishing, stink bidding, buying stocks at 52-week lows that just may have had a rough year for, any number of reasons. And then, there's a catalyst that might turn things around in Q1 of next year, as the clock strikes midnight on the 31st and the new year arrives, oftentimes sentiment changes. So on that note, let's get into it. We're going to start with MicroStrategy. Bitcoin. According to my chart, it didn't actually hit 100,000, hit 99,800. I'm pretty sure it hit 100,000 on some platforms. But anyway, who cares? Bitcoin has had an incredible run, and MicroStrategy has had an even more incredible run, up over 500% in 2024. And look at this move since early September to last Thursday morning. It traded up to 548 in the pre-market on Thursday morning. So as you can see here, maybe it's a little hard to see, but this is a screenshot of a private channel. And this is an actual trade that I took last Thursday morning at 8:36 a.m. at 547.49 per share. Short MicroStrategy. Don't try this at home. I'm already out of the trade, so yeah, you can see what happened. I basically got within $1 of the high, and it collapsed over the next several hours. And so why did I take a short trade on this parabolic stock that's run over some? And by the way, this is the first trade I've made in MicroStrategy in 2024. It's not like I've been trying short after short here, fighting the trend. No, this is the first trade I've made in MicroStrategy in 2024. And it just became evident to me that with Bitcoin closing in on 100,000 And Saylor popping up in the media everywhere the last couple of weeks. He's speaking at conferences. He's doing interviews. He was doing marketing. He was promoting MicroStrategy, his company. He was promoting Bitcoin, and he was getting the market ready to issue more convertible debt so he could buy more Bitcoin. Okay, it's just like junior mining CEOs when they're getting ready to do a financing, they're gonna do marketing, right? They're gonna get out there and tell the story. They're gonna pitch it, and then they're gonna give you the financing, right? It's that's the playbook for a CEO that needs to raise money. That's just how it goes down. And MicroStrategy did. So Thursday morning, I told my subscribers, by the way, if you're interested in that premium service, definitely send me a DM or send me an email. I'll tell you about it. But I told my subscribers, he's going to feed the ducks. He's gonna do an offering. Watch. It's the business model, right? You can just Google it. What is MicroStrategy's business model? Well, it's a Bitcoin, company. They hold Bitcoin. It's basically, for lack of a better term, it's like a Bitcoin fund, but it's publicly traded, and they use their stock to raise dollars, and they use the dollars to buy Bitcoin, right? And I have nothing against that, business model. It's a great business model. It's working well for MicroStrategy. But when you look at the valuation, and it's trading at $500 a share on Thursday morning, it was trading at a 300% premium to its Bitcoin holding. So by buying MicroStrategy stock, you were essentially saying, hey, I'm happy to pay $400,000 for a Bitcoin, when you could just buy it through, Coinbase or wherever for $98,000. So why would you do that? Why would you overpay? Because you love you love Michael Saylor. You think he's the greatest thing since sliced bread, and you're in on the momentum. You just love this chart, right? It's been going up. It's going to keep going up, right? Well, eventually, they're going to sell you more of their stock to buy more Bitcoin, and he always is going to hit the bid when the bid has been moving up for the last couple of months, right? That's what a good trader does. Sells into a strong market. The market was telling him to sell more convertible debt to buy more Bitcoin, right? So anyway, that trade worked well. That was my best trade of last week, I think. And would I shorted here? I don't know, right? It was a very attractive setup on Thursday morning. The trade happened. The stock sold off more than $100 a share in a few hours. Time to take profits and move on and wait for another setup, right? This is a tough stock to trade from the short side, right? But it has become a consensus trade, just like Bitcoin has become a consensus trade. And the fact that, Saylor's able to issue $3 billion of convertible notes at 0% interest, with the convertible at a 55% premium to the stock price at Thursday's close. So, these fund managers that piled into this $3 billion offering, they're so happy to receive 0% interest to just have the option to convert at $672 a share at some point in the future. Wow. That's I don't know. It seems pretty crazy to me that people are willing to loan their money and get 0% interest just to have the opportunity to buy shares in MicroStrategy at some crazy share price in the future. But who knows? They seem to love it. Anyway, so let's move on to Turkey Week. So it's Thanksgiving week this week, and you can see this little table here from Schaefer's research. Turkey Week is very strong seasonality. Now, seasonality doesn't work all the time, doesn't work every year. So just because it's Thanksgiving week doesn't mean the market has to go up, but the odds are pretty good it's positive 68% of the time, and the return is basically almost 4x the average return for the S&P 500 during a regular week. I mean, that's pretty impressive. So this is a tough week to try and short stocks. And new Treasury choice. So the Treasury Secretary has been chosen. It's this gentleman. And I'm not going to go into, because I don't know him that well, but just based upon what I've read about him, he's a Republican. He's been a big Trump donor. He worked at Soros Fund Management. He was a partner at Soros Fund Management. He started his own global macro firm, Key Square Group. So he's a hedge fund guy. He went to Yale. He's rich. He's a Republican. He lives in South Carolina. He's a white man. He's a homosexual. He lives with another man, has 2 children with this man. His house is pink. Very interesting. But he seems smart as can be, like brilliant smart. And he's pro-growth, right? He's pro-growth. He wants to have 3% growth, right? Real growth, 3%. He wants to reduce the deficit to 3% of GDP by 2028. So ballpark, let's say the GDP is 30 trillion by 2028. That's just a ballpark number. So he wants to get the deficit down to about $1 trillion. Right now it's about $2 trillion. As Biden ends his final year of his one-term presidency, we're running about a $2 trillion deficit. So he wants to basically cut the deficit in half over the next 4 years. Now, that's a lofty goal, and certainly maybe with higher growth and more oil, lower costs of energy, and the Ramaswamy and Musk Doge cutting a bunch of extraneous parts of the government, maybe saving $500 billion a year. This goal could be achievable by 2028. Doesn't mean it's going to happen next year. It's not going to happen next year. I guarantee you they can't turn this aircraft carrier around that fast. It's going to take at least 4 years. And remember, politicians always make a promise of some future date, and then they just extend the promise again. So they say, well, we're going to cut the deficit to 3% of GDP by 2028. Well, let's make it 2030 instead. They'll change they'll move the goalposts. But I think the stock market's going to love this guy. Okay, I think the stock market is absolutely going to love this guy. And I would say to the point that I would not be surprised if S&P futures open higher tonight and keep moving up above 6,000 into tomorrow. Okay, there's a couple of factors there. This Thanksgiving week, seasonality is one of the factors, but I believe Trump's Treasury choice is very stock market positive. And I have to think, so this is on my Substack, so please subscribe to Goldfinger Capital if you haven't already. You get all my best stuff as soon as I put it out. There's no point in not being on the list. I think the market was actually a little worried about Kevin Warsh being Treasury Secretary. That's just my speculation. Just make that up. I think that maybe this little dip we saw here and also the sell-off that we saw in gold, that sort of harsh move lower to 25.41, I think that could have had something to do with Warsh, the speculation around Warsh. Larry Kudlow called Warsh a hard money hawk. I put it in this post somewhere. Where was it? Well, I put it in here somewhere, I thought. Well, anyway, I'm pretty sure he did call Warsh a hard money hawk. I may have not actually. I thought for sure I did, but I don't see it. Anyway, I don't think the market loved Warsh as Treasury Secretary. I think maybe they prefer him to be Fed chair, but that won't happen until summer 2026. So I think there could be a sigh of relief with Trump's Treasury choice. Very establishment, Wall Street establishment hedge fund guy, super pro growth, and wants to drill, baby, drill, and bring up our oil production, right? Which Trump loves. Trump absolutely loves to talk about how he's going to permit a bunch of new oil wells and drill, baby, drill, and get that price of oil stable and potentially lower. So strong opinions weakly held. Okay, that's just a saying I have. Right now, I think this is a bullish setup for stocks coming into this week for a number of reasons. So let's talk about gold. So UBS sort of put this note up about a week ago, sort of a little bit of a hand-holding, soothing note out to their customers. I believe this was out on Friday the 15th. So that was actually when gold bottomed and started to turn up again. UBS reiterated $2,900 target by September 2025, $2,750 by March 2025, and $2,850 by June 2025. By June 2025. So UBS is very bullish on gold, and they see 2,900 by Q3 of next year. So that's a pretty good target. And when they put out this note, gold was still trading under 2,600, after that nearly 10% drop that it had over about 10 days following the U.S. presidential, election outcome. And so what do they say? Well, they reiterate that central banks continue to be big buyers of gold. And the central bank buying in terms of metric tons has moderated a little bit from 2023. But if you take a look at it in the context of the higher gold price, well, I think the central bank buying is at least as big on a total dollar amount as it was in 2023. And UBS sees central banks purchasing at least 900 metric tons in 2025. So at least the same level as 2024 and potentially higher. And central banks are somewhat price sensitive. So if gold does dip like it did down to 25.41, they're going to be there with bids to support the price, right? So that really is a strong underpinning to this gold bull market that we are in, okay? And just looking at the rebound that gold has had. So this is a 5-minute chart. Let's zoom it out a little bit. So here's 30-minute. I mean, just look at this. Very strong uptrend all last week. It stayed above the moving averages, the 50 period on the 30-minute for most of last week. Very, very strong uptrend. The slope of the moving averages is pretty clear, bottom left to upper right. Impressive, but where's my gold chart? Here it is. With that being said, this has been a very strong rebound over the last 5 trading sessions. We went from 25.50 to 27.12. I would expect some cooling off next week in gold. That doesn't mean it has to drop a lot, but maybe just consolidating around the 2,700 level. It could be 26.95 to 27.25, something like that. I expect a little bit of a moderation here. And the gold miners haven't really traded that great, right? They haven't, most of them have not rebounded at the magnitude that one would expect with a $160 an ounce gold price rally, okay? And oftentimes that is sort of a sign that maybe gold's about to cool off. So I'm not bearish on gold here. I'm just not wildly on the bullish side. heading into next week. A week or so of cooling off, of sideways action, would be quite healthy for the yellow metal. And I expect 27.25 to be a key level of, resistance early next week. So watch that 27.25 low. If gold gets above 27.25 and keeps going, wow, I will be extremely impressed. Let's keep moving on here. So the broader market, again, I have a bullish bias heading into next week. Again, this is an uptrend, so there's no reason to overthink this, either from shorter term time frames or the daily time frame. It is an uptrend, and I still think we're in a honeymoon period. So my base case in equities is I prefer to be long than to be short until year end. Then let's reassess on January 1st, 2025. If this is too overbought, if the rubber band is really stretched to the upside, I could see a correction beginning in January. As the transition of power takes place, reality sets in. Some painful adjustments are going to occur next year for sure with the Trump administration and their goal of cutting down the size of government, right? It's not going to go down without a fight. It's going to be ugly. It's going to be messy. And markets don't necessarily love change and uncertainty. But for now, we're in a honeymoon period. And well, I know a lot of people will say, well, stocks are really overvalued. The stock market is heavily concentrated into the Mag 7. Well, small caps are getting into the game now. So there's a rotation. We saw weakness in the Nasdaq 100, the Mag 7 names last week, but small caps, IWM, they're picking up, the charge here and moving higher. There's a very powerful breakout in small caps. It's a breakout in financials. The oil sector traded pretty well last week. So we're having a rotation, and this is what bull markets do. They rotate sometimes from mega caps to large caps to mid caps to small caps. Sectors that had outperformed previously start to underperform, and then sectors that have previously been underperformers start to outperform. And so that's what we're seeing. I cannot really be bearish the broader market when I see these charts like this, the IWM, the XLF, etc. Okay, Valero, VLO. So this is obviously an oil stock, you could say. But just simply put, VLO has very strong bullish seasonality at the end of the year into January. It's pronounced strength, seasonal tendency, like 75% of the time, it's up after Thanksgiving, well into the following January. So this is one of my top medium-term trade ideas. So day trade or swing trade would be more like, like intraday or like 3 to 4 trading sessions. That's like a swing time frame. But medium term would be like 1 to 2 months. And so VLO is a medium term long for me just based upon the chart, the seasonality, and the fact that I like oil stocks and oil services sector stocks heading into Trump 2.0. So I pounded the table on natural gas the last 3 weeks. On my Substack, there's a post just focused on natural gas and why natural gas could be a great trade in 2025. So we're lucky on our timing. Natural gas has moved up from 280. It hit a high of 364 at the end of last week, and then it printed a bearish candlestick on Friday. So from 280 to 364, that's a big enough gain for me to take my money, to take my chips off the table, take my profits, and step back and reassess. We also know that natural gas futures, the shorter term futures moves, are highly weather driven. I'm not a weather forecaster. I'm not meteorologist. So I'm going to just go to the sidelines here in terms of natural gas trades, wait for the chart to set up again, wait for a catalyst to emerge, and then potentially get back in. But this has been a fantastic trade for me in November. Long natural gas has been a big winner. But let's go to the sidelines for now and wait for another entry point. OIH, oil services, you guys know I pound the table on this repeatedly in the last month. It had a nice finish to last week, up 3 days in a row. It's at the breakout point. So 307 is key breakout point, key technical level on the OIH daily chart. I love this setup. If for some reason this dips early next week, I think you buy the dip. If it dips 1%, you buy it. If it dips 2%, you buy it. You buy the dips here. I see this breakout coming in the next couple of weeks. And once it gets above 307, well, my gap fill experts, which I know are out there in the audience, well, they're going to say, well, there's a gap to fill up near 323. Yep, there sure is. And that will be our first upside target on the long OIH trade. Crude oil also started to catch a bid last week. I thought Trump was going to be bearish for crude oil. Everybody I talked to said you can't own oil because Trump's going to drill and the price of oil is going to go down. Well, look, the market is starting to move up against the backdrop of extremely negative sentiment. I like being long things that other people hate. So oil is one of those things that everybody hates right now, and everybody agrees that Trump is going to be negative for the oil price for a bunch of different reasons I'm not going to go into. Well, maybe you can get back to the 200-day moving average, 76 or 77, over the next few weeks and maybe prove everybody wrong, that the consensus is wrong again. Another consensus trade, euro. Everybody short the euro now. Everybody hates the euro. Everybody thinks the eurozone is a mess again. Everybody agrees on that. Should I even agree on that? But I have to think that the currency pair, after moving from 112 euro dollar at the end of September to 103 on Friday, this is now very stretched. The rubber band is highly, highly stretched for the euro to the downside. Again, I look at a bunch of different sentiment gauges. The euro is the most hated market in the world today, okay? Of any major asset class or currency or futures pair or currency pair, whatever, it's the most hated right now. Everybody agrees the euro is a short. Perks up my ears, raises an eyebrow. I am not long the euro here, but I am looking at this one real hard right now. Treasury yield, so it looks like a bullish consolidation at a pretty high level in Treasury yields. I guess that the Treasury pick is pro-growth, and that might be pro-inflation. The market is not saying otherwise at this point in time, so we have to keep watch on that. But it's very interesting that gold was so strong last week as the dollar was strong, and Treasury yields didn't give much back at all, right? So that's really interesting to me when I see that. You know, when I see dollar strength and gold strength and bonds continue to be weak, that it's shifting correlations that we should really pay attention to. Uranium sector, URA, Cameco, everybody is bullish on Cameco here, and it's been working. It's been one of the better trades in 2024. And right now, I just don't see anything that's going to derail this sector. You know, that's not to say that I would buy it right here, right now. It's kind of tough to just buy after a pretty big up move last week, but it's absolutely working. And Goldman Sachs reiterated that Cameco is their top pick to profit and benefit from the AI data center trend. So who am I to argue with Goldman? I made a tweet about that as well. Albemarle. So this one, just purely from a chart standpoint, has been working. It bottomed in August. The rest of the lithium sector is pretty out of favor. But Albemarle bottomed in August, and it has been moving up, and it is working. And this to me looks like a completed chart pattern bottom in ALB. So absolutely my bias is to be long ALB here. Gold miners. So remember I was saying, well, Newmont, obviously everybody agrees that Newmont sucks. It's the worst gold mining company in the world. You know, we can all agree on that. It bounced last week as gold ripped $160 an ounce. Newmont couldn't even bounce 10% on that gold move. So not great. Kinross bounced about 10%, right? So that's kind of, I don't know. I feel like I would have expected an even bigger move than Kinross had on that gold move from, 2550 to 2700. That's why I was saying, like, I just wasn't impressed with gold miners last week. It just seems like they've lost some of their mojo here in at the end of October and early November, particularly Newmont. I made a trade on this. I made money last week on Newmont, but I got out of it. I don't love the tape in this one. I'd prefer to be long Kinross or IAG or AEM. Those are acting better for sure. MindMed. So this one became a Trump 2.0 trade. It had an incredible rise from $6 to almost $10 a share. Suddenly, I saw a lot of guys who had never talked about medical psychedelics previously talking about it and putting it as a buy recommendation. And sure enough, that coincided with a pretty vicious top up there and two huge down days that brought it back under $7 a share. With that being said, I wonder if we're about to get some important phase 3, the commencement of 2 phase 3 trials, news of the commencement of 2 phase 3 trials on MM120 for anxiety and MDD from MindMed. Probably not Thanksgiving week, although they could put out news on Monday, but probably the following week on the 2nd or the 3rd. And I wonder if maybe there's a trade. There's a trade against that $7 level, like buy at 7, put your stop under the 50-day moving average, and see if we get a lift back above $8 on that news. I view MindMed just as a day trading or swing trading vehicle. I'm not necessarily saying put it in your portfolio. There's a bunch of reasons why I say that. I think it's just a trading vehicle, but maybe there is a trade here into that commencement of 2 phase 3 trial news that is likely to come out in the next 2 to 3 weeks. So we finish with junior mining, as we often do. You see the hat I'm wearing, the hat I'm often wearing, American Eagle Gold. American Eagle Gold has been my best pick, trade, long position in the junior mining sector in the last 2 years. I took the first long position in American Eagle February, March 2023, about 12 cents a share was my first purchase. I believe I bought it as low as 9 cents at one point in time. Bought more at 25, at 70, and here we are at $1.06. So this has been an absolutely phenomenal trade, a phenomenal stock. Closes at a new all-time high on Friday at $1.06 a share. It's had a pretty strong uptick in volume, buying pressure on the move above that $1 number. And it really is in blue sky here. So I'm not going to put any price targets. I don't know how high it can go, but it seems like the lid is off this one. We'll see. We'll see how far it can go. But Tuesday, they're expected to close that financing, that $29.16 million financing from South 32. The fact we haven't heard anything about Teck makes me think that Teck opted out of keeping their pro rata, so they'll get diluted down a little bit, but still, they're going to be a big shareholders here still, so Teck will be at, South 32 will be at 19.9. I think Teck will be at like 14 or something. So you put it together, you've got more than 1/3 of the shares held by 2 very large mining companies who are long-term, investors. Like that capital isn't going anywhere. So that is just what every junior dreams of, is having the competitive tension, the deal tension, between 2 large multinational mining firms. And it's pretty clear that South 32 has made a decision to move into North America in a much bigger way. Okay, just by some of the investments and deals that they've made in the last few years. So then once this closes on Tuesday, which was the date that was set out in the news, about 10 days ago or so, we should start to get the assays news from. So we have 11 holes pending from NAC. I don't expect they'll put them all out in one news release. We'll probably get 2 or 3 batches, but the news flow will start to pick up again. So that'll offer the potential of some of those north zone, the copper enriched north zone, those holes potentially being very good, right? I mean, obviously the bar has been moved up here in the last month. There's no question about that. The bar for those assays at 55 cents was a lot lower than they are at $1.06. So be mindful of that, please. Be aware that investors have higher expectations for sure. But American Eagle could still surpass those expectations. I don't know. I can't handicap it. I really don't know. But clearly, a lot of people are given a great deal of encouragement by a $29 million investment from a large mining firm that has looked in the data room and made their choice to cut a very large check to be a major to be the largest shareholder in this deal right now. So we will see, but there's going to be a pickup again in news flow from American Eagle here over the next several weeks. Awale Resources. So I'm just going to say something I've already said, which I believe this drop down to 39 cents in early November was a bottom. Again, strong opinions, weakly held. I could be wrong about that. So far, I'm not. I believe that was a washout low. I think that 40-cent level is actually big support. And the volume buying that we saw come in there and move it back above 50 cents was very encouraging. I'm gonna send you over to this video from Nick, the mining book guy. He spends over an hour on Awale, and he says more than I'm going to say in this video, or I could say in this video. So go ahead and watch that one and hear why this is his highest conviction pick, and his average cost basis that he stated in the video is 61 cents. So, you can basically buy it 20% less than his average cost basis, and then hear all of his reasons why, it's a high conviction pick for him. But basically, with Awale, Q1 2025 is going to be a big period for the company where they're going to drill their 100% ground. Going to be a lot of news flow, and I think that a lot of investors are just kind of asleep on this story, and they're really not paying attention to it. So that could change over the next couple months. And I don't know why I'm looking back here because I don't have anything there. I just have these charts and these news releases up. So Hercules Metals, it's very interesting to contrast the sentiment, the investor sentiment on Hercules from exactly 1 year ago to today. Just notice the shift in sentiment. I don't have the exact share price that it was at 1 year ago, but I know it was well above $1, it's probably above $1.20, November 24th, 2023. And now here we are today at 55 cents. So more than cut in half over 1 year. Almost everybody was very bullish, euphorically optimistic on it at 100% plus higher share price. And a lot of people are very pessimistic on it right now. I'm not saying everybody is. There's still some bulls. There's still some holdouts like me. But there's a lot of negativity percolating around Hercules right now. And it's just interesting to notice that people love to be way more bullish when they're part of a cheery consensus and a crowd that all agree at a higher share price. But when it's had a 50% or 60% drop, and maybe things haven't gone exactly according to plan, it's not a perfect outcome in the short term, everybody jumps on the negativity bandwagon and starts talking bad about the company, right? And just notice that, okay? Just notice that. And the news they put out on November 19th, last week, there was nothing that I saw that was negative in this. If you wanted to find a way to spin something negative, you could say, oh, well, they lost another hole 10 got lost in the, in the upper plate cover. So there's another hole that was drilled with a core rig that couldn't get into the deeper Triassic plate. So let's get really negative and talk about how the company doesn't know what they're doing, blah, blah, blah. From people who have never run a drill program, who don't understand drilling at all. But they're still going to pontificate and express their 2 cents from the sidelines. That being said, I thought this news release was actually very positive. We have a big, fat bullseye target zone up here at Grade Creek. We've got this big anomaly that we don't really know much about over here to the west. And then, of course, we still have what we essentially have learned is potentially a potassic porphyry center, the thing that we've been looking for, the early biotite sort of alteration over here to the southeast, which assays are pending for several holes over there. So we'll see. We will see. But it's a target-rich environment. And even the headline intercept, right? So hole 2412, the one that's drilled closest to Grade Creek so far, is 338 meters of 0.5% copper equivalent. So I'm just saying 0.5% copper equivalent because if you throw in the silver and the moly, it is 0.5% copper equivalent. So that is a very respectable porphyry intercept. And they ended the hole in increasing mineralization. Look at that. It seems like they were fooled by the XRF and they terminated the hole in increasing grade here. So that is also very encouraging. And I just want to put this into context. Solaris, which is $750 million market cap porphyry play in Ecuador. The average grade, now obviously they're much further advanced than Hercules. They have very big, deposit, a big resource. Their average grade is 0.5% copper equivalent. So 0.5% copper equivalent, if you're able to drill out and prove enough scale, it is world class. Okay, I want to make that clear. Hole 2412 is a very respectable porphyry intercept. It is. It's not open to argument. It absolutely is. And the fact that the grade was increasing at depth and the trend in the grades of these holes as they move further north is also increasing. Okay, that is encouraging. That is encouraging. The chart, knock on wood, it looks like it's trying to bottom here. I don't know. It's a tricky one, right? Every time it starts to look good, like, okay, we've turned the corner, then it sells back off, right? We've seen this happen many times here in 2024. So I'm going to, withhold my opinion on that. Let's see what happens. But last week's news was positive, in my opinion, okay, in my assessment. Montage gold, MAU on the TSX-V. So I'm going to keep this one simple. This is Cote d'Ivoire. This is Africa. They bought back a 1% net smelter return royalty on its Kone project. I'm going to keep it simple on Montage. I think this is my number one M&A target in 2025 of any junior. Okay, not mid-tiers. Okay, I still think that IAG gets taken out. But juniors, Montage is super high quality. Look at the chart on this one. The drop from 260 to 210 as gold fell $260 an ounce was a gift to buy at the 50-day moving average. Okay, it's a text, but look, it pulls back to the 50-day bid support comes in and it makes new highs. Okay, so the chart is a beauty. It's an uptrend, lower left to upper right. Dig into this one on your own, but I'm going to just go ahead and step out on a limb here and say this is my number one M&A target in the junior gold mining sector in 2025. Very high quality, in my opinion. Scottie Gold. This was going to be on my tax loss silly season list. When it got down to 13 cents, I was licking my lips. Again, I'm not going to go into great detail. Golden Triangle, Gold Explorer. They have the Blueberry Contact Zone, which is sort of their bread and butter. Like that's where the meat is here. They also have a small mine permit for another deposit called the Scottie Gold Mine on their property package. So they're going to advance to a maiden resource in Q1 2025. It'll be the Blueberry Contact Zone and the Scottie Gold Mine put together. I expect the resource will be well above 1 million ounces in total. Hard for me to guess an exact number, but maybe 1.2, 1.3, somewhere in that area. Okay, I don't. It's hard for me to forecast that perfectly, but there's definitely the potential to grow this to 2 million ounces over time with more drilling. Now you can see what happened last week. They kind of had to take their medicine. The share count got up to 300 million shares, and that was the number one negative feedback the company kept getting over the last year. Is share price is too low, share count is too high. So the share consolidation became something that the company had to do. No company wants to do it, but they bit the bullet. They did it. And notice the time. So they put out share consolidation news on November 20th, and then they put out some great intercepts, some near surface, high grade gold intercepts the following day. And the market began to move back up, right? So they took their medicine, and then basically a lot of people sold it down to 13 cents on the share consolidation news, and then boom, good news, we've got, high grade near surface gold. I mean, these are very respectable hits. I mean, when you're hitting 8.7 meters of 6+ grams per ton right there at surface, that's economic, okay? I can't speak to the entire ore body, but you have a permitted small mine permit, a permitted gold deposit in a great location in the Golden Triangle near Stewart, BC. And there's a mill not too far away that's hungry for high-grade gold ore. So Scottie might have just what they're looking for, okay? And let's just pull up this share consolidation news release. And let's see here. Okay, so this will be completed next week, November 27th. So people are buying in anticipation of the completion of the share consolidation next week, okay? So again, as I said, this was going to definitely be on my tax loss silly season list. And, it doesn't mean I don't like it still at 19.5. It doesn't meet the criteria that it would have met at 15, 14, or 13 cents, right? Sitka. This is not going to be on my tax loss silly season list either because it's up pretty good in 2024, but that doesn't mean that it's not a buy, right? I love this correction back to 30 cents a share. I think 30 cents is a nice buy point for Sitka. I just noticed that the company put out assays in late October, some great results, and then they closed the financing, and now they've been quiet for a few weeks, and basically the market has sold off a combination of the gold price dropping, the gold mining sector dropping, and they just, they got quieter. Some warrants came in. Well, now sort of a clean slate here into end of November. And I expect that over the next few weeks, more assays will come out from Sitka, so we'll get more results. And who knows? A lot of VG, maybe some more hot holes, like 500 plus meters of a gram plus gold from surface. I don't know. We'll see, but I like the odds that some of the 8 holes still pending assays from Sitka will be more of what they've published so far in 2024. And then the final company I'm talking about is Solaris. So remember, I said the average grade of their deposit, their massive porphyry deposit with multiple porphyry centers in Ecuador, is 0.5% copper equivalent. And I believe that Solaris is worth $1 billion. Okay, at least $1 billion. Their current market cap, I think, is like 730 million in Canada. So I see 30 to 40% more upside here from this current share price, $4.50 a share. Now, what caused it to jump from 340 to 450 last week? Well, number one, they're drilling the piss out of this thing. They got 9 rigs going, exceeding 75,000 meters of drilling in 2024. But this was the big news. CEO, a guy from Glencore, Matthew Rawlinson, comes in as president and CEO, effective January 1st, 2025. And the company will now be headquartered in Zug, Switzerland, with further appointments to follow. This guy was formerly the head of copper business development for Glencore. So you sort of see the writing on the wall here. Glencore guy comes in, president and CEO, moves operations to Switzerland, and the market starts factoring in the potential of an M&A transaction in the new year. It's really as simple as that. He also wrote a $500,000 check to take a position, put some skin in the game, and a bunch of other board appointments. I mean, this was a power move, right? And the market took notice of this power move and this change in the C-suite and the board, and they loved it. And they bought it up. They bought it up all day Wednesday, cooled off on Thursday, and then they bought up more on Friday. So Solaris, yes, it's had a big move. You may not want to just chase it at 454, but I still would see some upside here over the next couple months as Rawlinson and his team get to work on Solaris with their new headquarters in Switzerland. They are fleeing Canada. They did not like what the Canadian government did, blocking them from a Chinese investment. And so maybe there will be a Chinese investment in 2025. We will see. I have no idea, but market likes it. And remember, 0.5% copper equivalent. If you have enough, it can work even in the middle of the jungle in South America. And Solaris has enough. Okay, this is a billion ton plus ore body that they're still drilling out more ore. And I just want to show you what a good porphyry copper intercept looks like. 87 meters of 1.23% copper equivalent, 93 meters of 1.01% copper equivalent, and 84 meters of 1% copper equivalent. Or this one is obviously much better, 475 meters of 1.03% copper equivalent, 57 meters of 1.1% copper equivalent, 69 meters of 0.82% copper equivalent, 69 meters of 0.77% copper equivalent. So these are all headline holes for a massive porphyry copper play in Latin America. So there's your comparable for what is truly good and world-class. And then look at some of the porphyry plays we know in the US and Canada and compare and contrast what it takes to get to $1 billion valuation in this porphyry copper game. Thank you for your time and attention. Enjoy your Thanksgiving week. And if you're in Canada or Europe, enjoy your week anyway. And write a gratitude list. Thanks for tuning in and have a powerful week.